The secret to massive profits isn't just your strategy, it is your calendar. Most traders are losing simply because they are trading on the wrong days. In this video, you will learn about the golden days when technical analysis is the most effective, and the days when it tends to provide false signals. Learn a simple calendar trick I use to pinpoint when technical analysis will work best on Forex and when it will burn your money. The first days that you should avoid and not trade at all are the days of US banking holidays. Market volatility and liquidity drops significantly on Forex or any other market these days. It leads to very weak price movements, consolidations, false signals, and traps. Because of these factors, technical analysis-based strategies show lower performance these days. You can find the exact days of US banking holidays in any decent economic calendar. The one that I use is on investing.com website. Just set a filter by the United States and you will see all the coming US banking holidays. Personally, I never trade US banking holidays and I always take a day off during these days. Banking holidays of different countries can be a reason to not trade particular trading instruments and assets. For example, an official banking holiday in the UK is a red flag for trading any asset classes linked to pound sterling, such as UK bonds, UK stocks, or a currency itself. For example, if you trade pound pairs like pound dollar, pound yen, pound cat, pound Swiss, don't trade these Forex pairs during the UK banking holiday and take a break. Traders, don't miss my next free trading signal. Subscribe to my free Telegram channel now, the link in the description below. Again, to not miss a banking holiday in a particular country, use the economic calendar. I set up my economic calendar in a way that it shows me banking holidays of countries whose currencies I trade. Another types of the days that you should not trade are the days of Federal Reserve interest rate decisions announcements. The days of Fed rate decision and FOMC press conference are very risky for trading. Interest rates and the rhetoric of the Fed are the major factors for a global economy. Market participants pay close attention to Fed actions. For that reason, Fed rate decision days are very slow and full of traps ahead of the news, and are very volatile after the rate decision announcement. That is how pound dollar pair was acting during FOMC and Fed rate decision day on an hourly time frame. The market was very weak and indecisive ahead of the rate decision announcement. And after the rate decision, it immediately formed a huge high momentum candle with more than 100 pips range, and the market volatility increased sharply. With such an extreme volatility, a likelihood of being stopped out from the trade is very high. That is why I recommend not trading such days. The same logic will be applied for trading asset classes of a particular country. ECB rate decision and press conference will be a signal for you to not trade euro this day and euro related instruments and wait. Monitoring the economic calendar will help you to not miss the interest rate decision of the central bank of any country. While interest rate decisions are the most impactful news in the economic calendar, there are a lot of other news releases that can significantly affect the markets. What you should always remember is that fundamental news are completely unpredictable, and the market reactions to that can be completely irrational. Therefore, even the best technical analysis setups and confirmations can easily fail with the release of such news. That is why I always recommend to my students to not trade 3 hours before and 3 hours after such news releases to make the markets calm down and price in a new data. So though I trade during these days, my trading schedule is adjusted by this news. You can set the economic calendar to display such news. I'm talking primarily about high impact US news like CPI or unemployment data, but also high impact news of a particular country whose assets you trade. Such news can create a big mess on different markets, sharply increasing the volatility. For example, this morning we got the release of Swiss inflation data and CPI. For that reason, we did not trade Swiss Forex pairs 3 hours before the news release and 3 hours after. That is how it affected our trading schedule. The best and golden days for trading technical analysis will be the days when there are no high impact news and no banking holidays. On a day with no major fundamental data, the market lacks a clear fundamental reason to move in a specific direction. In this information vacuum, traders and algorithms follow what they see, the price chart itself. The collective focus shifts from why to move to where the market will likely go based on its recent behavior. behavior. This creates a feedback loop where the market participants look at the same levels and patterns, making them more likely to play out. For example, there will be no high-impact news releases on Monday next week, and it will be our golden day for trading technical analysis. Such days are very rare, but they provide the most accurate trading setups. I caught the biggest winners and the longest winning streaks in my trading career trading this specific trading days. That is why I never miss them. Always remember that even the best trading strategy has the days when it is better to avoid trading. Use the economic calendar to identify these days in advance. It will help you to increase your profits and lower your risks. Let me know in the comment section if you have any questions. Don't miss my next free trading signal. Subscribe to my free Telegram channel now, the link in the description below. Also traders, please watch my other videos.